Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, August 15th, 2013. We're going to look at a couple of charts today, starting off with the S&P 500 Large Cap Index. Again, I'm going to mention several charts in this video, so if you want to see those charts, you can go to the free website at PerfectStockAlert.com, 100% free. You can check out the actual charts, my personal charts, on the homepage there on the website, so check that out. And again, they're updated nightly. The main thing here to show you is that you've had this rally to the upside on just about any chart you look at. You've had that we're in this little downtrend scenario, lower series of highs, lower series of lows, come down and hit the 50-period moving average, and we find the hammer candlestick formation. That tells you to look for the bounce. We talked about that when it was happening. Then we come back down here, hit it again, no hammer candlestick formation, bounce, fail, and then we go lower, closing below that 50-period moving average, which you just saw again today on the Dow. So that's important to keep an eye on. Whenever you do that, you see that sell-off like that, look for something. You want to see this kind of a scenario where you get some kind of a hammer formation form and then confirmation if you want to try to play that bounce to the upside. And this personal situation here where you have this chart, you can see that we were in this downtrend, and then all of a sudden we come up here and we take it out. We take out the previous highs, but we never tested it. You have to test it. That's what I warned about back during this time period. You can rally all day long, but you still have to come down here and test the low. If you don't hold it, then of course you're still in this major downtrend. If in fact you do hold it, then you have buy opportunity, and that's where you want to be buying, not chasing up here and up here and up here and up here, because then something happens and you go like, oops, what happened? Well, you're testing. That's very simple. I also want to point out on this chart, if you look at the ultimate oscillator comparative to the price activity, I'm using the closes because that's what the ultimate oscillator uses whenever it's determining. It's going to be using the closing price, and so you want to use the closing price on your chart. Whenever you look at this, you can see the high point here moves on down to this high close right here. Then you get a rally off of that point to a new high, right? Okay, not confirmed, telling you bearish divergence, not to trust it. She pulls back. Then she tries it again. Here we go, even higher. Again, lower on the ultimate oscillator, telling you no, this is trending down, price is trending up between those closes. It tells you it's unsustainable. And then what happens? We end up giving it all back. Long-term chart shows that this entire move right here is a bearish divergence, and all of it would, of course, then be erased, so which means test the low. So it's all very self-explanatory, really. The main thing to show you on this particular chart, though, that I want to point out is that you were consolidating really up here, and you from this point right here, you just had to kind of move sideways is all you were really doing. Here we go like this, and you can see that the Bollinger Bands start to tighten up here. They were real wide, and they come in like this, okay, and you tighten up, and then we break, all right? Whenever you're consolidating, you can predict or try to predict which direction it's going to break in, like I was doing, and saying it's going to break to the downside. But for the most people, they just look at it and they say, okay, here's my channel. I can draw it like this, and draw this guy right here, and say, whenever we break, then I'll start trading this in one direction or the other. Well, the direction is down as of here. You've just closed below that, moving lower, and you'll notice that occurred at the same time period that the actual bond yields had broken out to the upside. So let's look at that chart. Alright, before we look at that chart, I want to point out one more thing. If you look at any other charts out there, this is the Russell 2000 Small Cap Index in this particular case, and you can see here we have the same channel and just broke to the downside. Again, I just showed you the S&P was doing the same thing. You can look over in Europe and you see a lot of the same things. Actually, in a lot of the Europe charts, you'll just see this massive rally to the upside that's up there trading at the upper Bollinger Band line, and it's not even tested anything, so it's very susceptible as well. So keep an eye on all those charts from the bear side. Okay, here we are looking at TNX, the 10-year Treasury note yield, and in this particular chart we talked about before, when you had this little rally going on for a while here and massive move to the upside, spooked everybody in the market. The Fed just lost control. What's going on? And remember, their objective is to keep the actual yield low, and when you have yields rising, that's a concern. That's what caused us a problem a while back with Greece and Spain and Portugal and all the others, is when you get so expensive, when these governments come out and they say, okay, we need to float bonds to fund our big fat budgets, then they turn around and they say, okay, well, we'll sell these bonds. Well, if people say, well, wait a minute, the average yield is X, I want more, because you're higher risk, that forces them into a corner where they say, eventually they say, you know what, we can't actually afford to pay that, we must file bankruptcy. You get the default scenario. So whenever you're looking at this and you see the TNX and the 10-year Treasury note yield rising like this and breaking out of the previous resistance line here, and that again is a buy signal on the the yield. So you'd be looking for bonds to fall, which would be yield rise, and that would be something you would expect not just in the U.S., but you would expect everywhere else as well. So all these signs are very troubling for the overall market, especially though the market's going higher and higher. The Treasury note yields were not going lower and lower. They were just stabilizing after a massive move to the upside, which means this is the first leg to the upside. This is the measured move, and then you've got all of this that's gone on for a while going to come out the other side. So again, we're already bullish. We told you that back when it was happening, when we had just this little consolidation period here. We told you could be buying all of this stuff here, and then another opportunity would be when you broke out, you could buy at that point as well, looking for it to jump and continue to run higher. So all of that, again, is very bearish for the overall markets, very bullish for the people who are going out and looking to trade for bonds that are downside and yield to the upside and all that. But again, this is something that's a big problem for global markets overall. It's also something that's reason why I'm only bullish, I talked about yesterday, only bullish on commodities, and so that's important to take note of as well. And I'm also, of course, bearish on the dollar. Okay, if you've been to the free website of PerfectStockAlert.com, you know at the very bottom down there you can go down and find the global market charts updated nightly. These are my personal charts, short-term and long-term. And again, I know I mentioned a lot of different charts in today's video. You will find them all right here. There's like 21, 22 charts. And so be sure to check them out nightly because they're updated nightly, and there's many different opportunities setting up as we speak. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.